Bittensor is probably at the highest mind share we've ever been. I think we're at the high watermark of mind share we have on the timeline. Everybody's talking about it. Everybody's paying attention to it. But I don't think that that's translated into buying pressure on the alpha tokens as directly. And I think the big challenge here is that a lot of the solutions, to Mike's point, have been almost trying to get people to get on a boat and then come to Bittensor Island, which can be pretty scary, especially, when you start learning about the Bittensor wallets that have hotkeys, cold keys, and then you have to install a new wallet. All these kind of steps just add friction to your average user to be able to get into the ecosystem.
When the kind of founding fathers of the internet were thinking about protocol design, they intentionally left white space for companies to build on top of. So they intentionally didn't add backlinks, which allowed Google to build $1 trillion business on top of Google. They could have added that feature, inherently from the very beginning. They chose to leave to allow other companies to go innovate on top. I think what we're trying to do is we're trying to build a foundational primitive here that will allow other companies to go build profitable businesses without us having to entirely own the entire stack.
Do you have a subnet? I mean, that's the main requirement that we're going for. Beyond that, it's really, we're just looking for teams that are excited to participate and support the project. What we've asked of teams, and I wouldn't necessarily put the term requirement on it, but what we've asked of teams is for the teams to commit some liquidity from their owner key into the initial pools. The reason for this is twofold. One is the owner actually gets some upside on their alpha that they're holding on to, so that now there's liquidity there. But then on the second side is that actually creates that initial base of liquidity that allows the initial flows to come in and out.
When this moves over to base, those xAlpha tokens, the price chart will be inclusive of the APY. And so you'll see much healthier looking price charts because the value of that xAlpha token will be reflective not just of the price of the subnet, but inclusive of the APY on that as well. And so you'll see much healthier looking charts. And I think that in a nutshell has been one thing that's been a detractor for liquidity, is that the average retail user doesn't understand that the APY actually counteracts some of the negative price movement from root selling.
Welcome to the Ventura Labs podcast. Today, we are joined by Mike Grantis and Victor Teixeira of General Tao Ventures. In this conversation, they introduce Project Rubicon, a bridge initiative to connect Bittensor subnets with base ecosystems liquidity using Chainlink CCIP. They cover liquid staked xAlpha tokens, partnerships, governance, potential for DeFi derivatives, and advice for builders in the post-Tao Flow era. Now, back to Victor and Mike with the 72nd Ventura Labs podcast.
Okay, Mike and Victor, you guys are here today for Project Rubicon. How are you guys doing, man?
Doing well, man. Thanks for having us, Grant.
Thanks for having us.
Absolutely. Excited to have you guys here. So lay it out for me. What is Project Rubicon?
Project Rubicon is General Tao Ventures' attempt to, quote unquote, bridge the Rubicon into the base ecosystem and bring subnets to where the liquidity lives. We're really excited about this project. We've been working on it for, I don't know how many months now. The devs have been putting in overtime, burning the midnight oil, but it's finally here. We're finally launched. And we're really excited to share it with the community. We've already got the buy-in from some of the biggest subnet teams. And, we see this as a major step forward for Bittensor. I think, as it stands, Bittensor is an island. And there have been attempts to bring ships of liquidity to that island. But what we really need to do now is we need to bring those subnet ships to mainland and show them what real base liquidity looks like. And so we're really excited to have had the opportunity to partner with Chainlink CCIP to build this and to have the cooperation of Base and Aerodrome, the largest DEX on Base. And so we think this is going to be a major step forward for the ecosystem, and we're really excited to share it with the community.
And for this project, how'd you guys decide on using Chainlink and CCIP?
Well, actually, that was a happy accident. It happened in Con, at ETHCon, and Jordan, our COO, connected with Luke, one of the kind of lead architects in Chainlink, and he's always been bullish Bittensor. He knew who we were, he knew our reputation, and he was one of the Luke Lim, to shout him out, was one of the big advocates for not only General Tao Ventures, but for the Bittensor ecosystem in general, to get Chainlink over the line to work with us and partner on this. So, Chainlink CCIP speaks for itself. It is by far the most trusted, most secure interchain operability protocol, trusted by the largest institutions in the world: BNY Mellon, Citibank, JP Morgan, Visa, Deutsche Bank, to name a few, Swift. And so it's decentralized. The validators are some of the biggest Fortune 500 companies in the world, never been hacked. It is truly the world's most trusted bridge protocol. And so we thought, only the best for Bittensor.
Before we get into the users of Chainlink here, why does Bittensor need another bridge? We've seen many attempts, even many subnets attempt this. Why does it need another one?
I think I'll take this one. So I think at a high level, the Bittensor is probably at the highest mind share we've ever been. I think we're at the high watermark of mind share we have on the timeline. Everybody's talking about it. Everybody's paying attention to it. But I don't think that that's translated into buying pressure on the alpha tokens as directly. And I think the big challenge here is that a lot of the solutions, to Mike's point, have been almost trying to get people to get on a boat and then come to Bittensor Island, which can be pretty scary, especially, when you start learning about the Bittensor wallets that have hotkeys, cold keys, and then you have to install a new wallet. All these kind of steps just add friction to your average user to be able to get into the ecosystem. And so what we said was, well, why, instead of trying to do this top down as it's been attempted a number of times, what if we do this bottom up, but with the support of the subnet teams, so that we really build this into the canonical bridge for Bittensor, and this really becomes the core bridge across. And so through that, we found another key problem, which was that a lot of alpha tokens, because of the high yield on them, it's very hard for your average retail user to kind of understand how those tokens work. And especially in a centralized exchange standpoint, when you buy one token, you don't really get the yield that alpha token should be generating on that position. And so we said, well, what if we take all these issues together and then build a product that solves all this in one go? And so that was really our idea of building this liquid staked alpha token, which now wraps the yield into an ERC20 token. So just by holding the xAlpha, the ERC20 token of your subnet, you're getting the yield from the validator reward yield on that. And then on the second part is, what if we partner with CCIP to build this bridge from Subtensor EVM to Base, where we can actually bring the alpha tokens over across into these ecosystems and launch the pools on Base, so that liquidity can live there and already tap into those existing liquidity movements and the demand that is already available there. And so that's really been our approach of trying to do it bottom up. But then the last piece of the pie was really to get in the subnet teams, because all these teams are holding on to large amounts of alpha tokens in their owner wallets. They're not getting any liquidity on this. So why not actually utilize that liquidity as the core market making inventory to facilitate the flows in and out of Bittensor? And so that's really the three parts of the equation that we've put together in Project Rubicon.
Okay, couple follow-ups there then. You guys built this, you kind of glossed over, but in a partnership with Chainlink. How did that partnership dynamic go? What did that look like in the development process?
Yeah, so we really, it all came down to and shouting out Luke again. It was that meeting up in cons. We started talking there. Might have been the heat that got us thinking about all these kind of crazy ideas, but we started just talking about, hey, how can we get Bittensor to get out there into the rest of the world? And so from those conversations, we really kind of divvied up the tasks, where on one side, Chainlink knows what they're doing with CCIP. They know how to integrate it with different networks. So they kind of took up that mantle of that side of the equation. And then for us, on our side, we knew how Bittensor works, and we really understand how the mechanics of Finny works, and then also how Subtensor EVM works. And then that's really where we took up that side of the equation. And so then together, that really allows us to have the product as a whole, where on one hand, we have this really robust Bittensor tooling that allows us to get to an ERC20 token entirely within Bittensor tooling, and then utilizing CCIP just for the bridge piece to get out into Base.
It's also worth noting there's typically a six-figure chain integration fee for bringing on Chainlink CCIP to new chains. And I think partially because of the confidence they had in us in the partnership, partially because of their belief in Bittensor, they actually waived that chain integration fee for us. And so, in typical Bittensor fashion, we don't pay for listings and we don't pay for chain integrations. That was a happy bonus for us as well.
Okay. And then you guys are launching with a plethora of subnets. It's like 15 subnets, I think. How did you guys have so many subnets at launch of this thing sign up and be like, hey, let's do it?
Honestly, I think some of that just comes down to relationships, being people that people want to work with in the space. We've been in Bittensor since summer of 2023. We've built good relationships with subnet teams, with validators, with a lot of the major players in Bittensor, and we haven't really thrown stones. And so I think people typically, want to work with people that they trust, that they know the reputation of, and we showed them a product that they can truly stand behind, right? So that was just the first cohort. As it stands right now, we're launching in phases. And so now that this first cohort is launched, we'll be opening up applications for the second cohort. We're really excited to work with each and every team that is interested in providing liquidity. But really, I think it was a great feat of the team to make sure that we were kind of bringing this opportunity to the best and the brightest in the Bittensor ecosystem, and we're quite confident that the rest of the market will follow where those best teams are going.
What is a requirement for new teams that are like, hey, I want to sign up for this. I want to be on this bridge and get access to the base ecosystem? What do you guys look for in those subnets?
Yeah, to be honest, I think at the end of the day, we the first requirement is: are you on Bittensor? Do you have a subnet? That's the main requirement that we're going for. Beyond that, it's really we're just looking for teams that are excited to participate and support the project. What we've asked of teams, and I wouldn't necessarily put the term requirement on it, but what we've asked of teams is for the teams to commit some liquidity from their owner key into the initial pools. The reason for this is twofold. One is the owner actually gets some upside on their alpha that they're holding on to, so that now there's liquidity there. But then on the second side is that actually creates that initial base of liquidity that allows the initial flows to come in and out. And that's really all we were asking of teams. Beyond that is really up to the team. We're happy for the teams to kind of utilize this however they want to in the rest of their stack. I think that there's a few interesting things that we've discussed with a couple teams on of how this could actually change governance in Bittensor for subnets as well, because now you've essentially got a wrap token that earns the yield. So it's an interesting simplification for governance type voting mechanics. And then we've also spoken to a number of other DeFi protocols on base of what would the world look like where we could actually list xAlpha tokens as lending collateral, for example, where you could borrow against it. And so really the first step here is just getting the buy-in and the participation. And to Mike's point is we're a lot stronger coming and negotiating together than negotiating on an individual basis. And that's really all where we're asking of teams is just to be a team player in that sense.
And in terms of governance implications here, what are some new governance models that you think this allows?
So I think the biggest part that this unlocks, and not to do too much of a plug for Subnet 35 here, but we are in a world now where alphanomics needs to be much more important to how you're building your subnet. You have to have clear usage of your alpha tokens, and you have to build those proper governance structures, which I don't think have existed before in Bittensor. So for example, just to give an easy example of governance, one challenge with governance with alpha tokens are if you have, call it 100 alpha in your wallet, and now you're making a vote on a decision, right? Am I calculating the 100 alpha you had in your wallet at the time that they got into your wallet? Or am I counting maybe the 110 alpha that you have in your wallet because of the validator emissions? What's the underlying vote that I'm actually counting in that part? Now, if you wrap that into an xAlpha token, that one xAlpha token will always represent an ever increasing amount of alpha on the other side. So now if I vote one xAlpha, Mike votes one, and you vote three, well, you've won the vote because you have the most in this position, but it simplifies the governance in that sense. So this is really one of those kind of elements where the liquid staked alpha solution that we built here now really becomes a building block or core primitive for any type of solution, whether it's DeFi, whether it's governance, or anything else that we may not even be thinking of today.
Can I add one point to that? Because Victor made a really good point and kind of glossed over it. So on BitTensor, if you're staking to a subnet, you're earning somewhere in the vicinity of like 50 to 100% emissions, right? In APY. And I think that's not clearly documented for the average retail user that's looking to get in. And so sometimes they see these down only price charts, and they don't realize that the user that's staking to that pool is actually earning the yield on the back end. When this moves over to base, those xAlpha tokens, the price chart will be inclusive of the APY. And so you'll see much healthier looking price charts because the value of that xAlpha token will be reflective not just of the price of the subnet, but inclusive of the APY on that as well. And so you'll see much healthier looking charts. And I think that in a nutshell has been one thing that's been a detractor for liquidity, is that the average retail user doesn't understand that the APY actually counteracts some of the negative price movement from root selling.
And where do you guys get your beak wet in this? How do you guys make money from it? Is it just staking to your validator? Is that where the money comes to you guys?
Yeah, so we take a small fee on deposits. We take 25 bips on deposits. That's about $250 per every $100,000 deposit. So it's just a relatively small fee on that. That also offsets any debasing from arbitrage if anybody's moving in and out and there's price differences. So that fee is there for both a structural and a fee perspective. And then the second part is that we make 10% on the staking revenues, standard as per like Lido or any of the other platforms.
Okay. And then some of the other partnerships of Chainlink and CCIP, you mentioned Swift Bank. This is one that I was not familiar with. What does a partnership like that or other notable partnerships of Chainlink entail?
Yeah, I'll defer to Chainlink to go into more detail about their partnerships. Obviously, not a Chainlink employee, so we don't want to talk there. But more broadly and kind of in more generic terms, I think that the big thing here is as institutions come into crypto, there is a level of fragmentation that exists now that perhaps didn't exist in 2020 when it was just Ethereum and Bitcoin were really the two main leaders of the dance. Now there's a number of different chains, private chains, etc. And the requirement for you to be able to message cross-chain in a reliable and safe way, and then second from that, to be able to bridge and move assets from one chain to another becomes more and more important the bigger and bigger you are as an institution. So for example, the likes of Swift, JP Morgan, other number of these institutions that Chainlink works with, at the end of the day, they have looked through the stack to figure out what is the most reliable way to integrate these cross-chain messaging protocols and the cross-chain interoperability protocols, CCIP, into their day-to-day flows. And they've made the decision that Chainlink is the most reliable partner. And that's part of the reason why we decided to go with CCIP over any of the other alternatives.
Yeah, it's not only, the most reliable, but it's also decentralized. And so the node providers, the validators on CCIP are, some of the largest institutions in the world. There's a dozen of them. And CCIP has something very, I think anybody that's interested in kind of these bridges should look at the underlying infrastructure of the bridges. And one thing that CCIP holds true is it has shared security. So every application that uses CCIP has that same underlying shared security versus other protocols like layer 0, for example, has individual security. And so you can think about this kind of like, Ethereum, any token launching on Ethereum, having kind of the shared security of Ethereum versus individualized security that is set on the application level. And so there's lots of good articles that outline kind of the differences here, but I think looking at the underlying security and the differences in those security trade-offs, is very important.
Speaking of security, you guys are audited by HashLock. What is the importance of that audit? What's the significance of that? What exactly are they auditing?
Yeah, so they've audited the smart contract front to back. HashLock is a great partner of ours. We've worked with them for a while. Our background before GTV was in the VC space, so we had a lot of portcos that have worked with HashLock over the years. So we do have that relationship there, and they have been very, very good auditors. Their main focus of the audit is reviewing the smart contract code, making sure that the logic and that all the compute, all the kind of elements of the smart contract work the way that they're supposed to, as it says in the docs and it says on the tin. And really their goal there is to really provide the certainty and the comfort to users when they come onto utilizing Project Rubicon, that they're able to know that their funds are safe, that their funds are being held in a non-custodial way, and then to make sure that all the functions that they are interacting with do exactly as they say without having any risk of leakage, overflow, or underflow errors, etc.
Another piece in this puzzle for you guys was Aerodrome. What was the role that they played in facilitating all of this?
Yeah, I mean, Aerodrome is the largest DEX on Base. And, as we said with Project Rubicon, our goal is to go where the liquidity lives. So Aerodrome, I think, does about $22 billion a month in trading volume. And, in going to Aerodrome, it's not just like we're listing pools on Aerodrome, because for these new nascent kind of subnet tokens, we would be listed as unknown if we didn't have a relationship there. They've actually agreed to move these subnet tokens into the emerging category, and so they're visible for end users. And so, there's more pieces to the puzzle than just building the bridge. It's building the relationships on the other side of the bridge that actually make this thing functional and useful for the BitTensor community. Part of that is Base and bringing, their exposure and their marketing support for Project Rubicon and kind of bridging the ecosystems. But the other is where the liquidity actually lives, and that's on Aerodrome, and making sure that liquidity is findable by end users that are using those platforms.
And in terms of providing liquidity to these different bridges, are you reliant on the subnet owner exclusively, or can anybody provide liquidity? What's that going to be looking like?
Yeah, if you have alpha, come to Project Rubicon, rubiconbridge.io, and come deposit your alpha, bridge it across over to Base, and then deposit it into one of the liquidity pools. So it's completely from the launch of the actual tokens is still permissioned. We are limiting that just to avoid any exploits or kind of any kind of scams associated with that. So there is a list of tokens there that are supported, but once they're launched, anybody can provide liquidity, anybody can bridge it across, and then once you bridge it across to Base, you can either deposit it into the Base pools on Aerodrome today, but then tomorrow there's always the possibility that we start opening up lending and partnerships with lending and borrowing platforms where you can now deposit your xAlpha to borrow against it. Or perhaps in future, there will be perp dexes where you can use it as collateral and trade on it. So really the goal for us here was to build the core DeFi primitive and then allow everybody to come use it. And then from there is use it however they see fit or build on top of it.
And for a user providing liquidity, do they forego the staking rewards, or do they get staking rewards and liquidity fees?
They get both. So that's the beauty of the liquid stake token is that once you mint this ERC20 token, this ERC20 token will always increase in exchange rate back to alpha. So for example, let's say hypothetically you have 1,000 alpha tokens in your wallet, you mint one xAlpha token. That one xAlpha token, as the staking rewards are accrued, that xAlpha token increases in value in alpha. So at the end of this, that exchange rate may be at 1.1. So when you redeem your one xAlpha, you actually walk away with 1,100 alpha tokens back in your wallet.
Yeah, and I'd also just make the point, like part of our go-to-market strategy and reaching out to these subnet teams and making sure that they were the first to provide the liquidity is that they have these owner keys that sometimes have exorbitant amounts of alpha that they can't really sell, they can't really use. And so we wanted to give them an opportunity to utilize that alpha to build liquidity in new ecosystems while also earning a yield on it through the LP fees. And so it's taking this kind of passive asset that's just sitting in their owner key and making it an active asset that's going to bring more users, more traders, and more liquidity into their liquidity pool in the end. Which now with TauFlow is all anybody cares about, anyways.
Another thing that you told me before we started the podcast was the collective bargaining power of having a large amount of subnets listed on one bridge. Can you just speak to the importance of that and what this actually means in practice?
Yeah, look, I think, Bittensor is a collective, right? There's 128 different teams building subnets, but at the end of the day, we're all trying to push Bittensor forward. And when we create a project like this, Project Rubicon, and we can have 25, 50, 100 subnets all part of this collective, it gives us a lot of power to go speak to centralized exchanges, listing partners, and say, hey, look, don't do these one-off tic-tac deals. Let's bring the entire Bittensor network to you, right? And let's come up with an agreement that works for the entire collective, as opposed to, charging $50,000, $60,000 in listing fees in those alpha tokens on a one-off basis, right? We hold the power when we kind of band together as a community versus in, the traditional world where the centralized exchange holds the power and they really, kind of give the thumbs up or the thumbs down on what goes through. The other thing for Rubicon is like, you don't have a listing fee to join, right? You provide your liquidity. That's still your liquidity. You still own it. It's still in your custody. But then you're giving the opportunity for more traders to have access to that token. Just like what you're looking for on centralized exchanges. You're not paying for it here. And then once you're part of Rubicon, if you want to go to that exchange yourself, you have a hell of a lot more bargaining power to say, look, this is the volume I'm getting and I'm not even paying for it. Why am I paying for that volume with you guys, right? So there's power in the collective, but it also gives you more bargaining power individually if you want to go have those conversations yourself.
And
I think
sorry.
sorry. And I think just to add to that point, I think just to really echo that last point is at the end of the day, every project and subnet team that's building, you are the product that centralized exchanges want to sell, right? The centralized exchange inherently has no product without projects to actually list their tokens on them. And I think that a lot of that power dynamic is somewhat reversed, especially when you are the small project calling up the big exchange and being like, hey, can I get listed, please? Versus with Rubicon, we can already cut that out and kind of be like, look, there's already a demand for this. There's already this, people want to get into Bittensor. People are aware of Bittensor. And by being able to actually grow that demand organically, you can now take that away and go back to the exchanges and be like, look, actually, I'm going to be bringing X amount of volume to your exchange. Therefore, I want terms that are a lot fairer than what would have been offered if you just kind of cold called them.
And in terms of volume traded for these new tokens, we've seen listings of specific subnets on centralized exchanges already. What type of volume have you guys been seeing of those tokens?
Yeah, I think to be candid here, I think that the challenge is centralized exchanges no longer lead the dance with regards to volume like they used to. I think the perp dexes and especially the base app has changed that narrative quite significantly versus, call it DeFi summer in 2020 and kind of those early days, where now more and more dexes are leading the dance in terms of the volume. So that's really where we see this opportunity, is to kind of skate to where the volume is rather than try to go after a smaller subset of volume and try to carve out a market share against a number of other kind of people in this closed ecosystem.
Do you think the volume outside of the Bittensor ecosystem could ever surpass what's actively traded inside the Bittensor native liquidity pools?
I think absolutely.
I think it very well. I think it very well could, right? Like, we just have to look at the quantums of liquidity that are on base versus what's being traded on Bittensor. At the end of the day, it's a representation of the underlying asset that they're buying or selling, right? And so, you can look at the trading volumes of derivatives are 100 times more than the trading volumes of spot. And so, yeah, I don't see any reason why a derivative token couldn't have a higher trading volume than a spot token.
Yeah, and maybe just add a historical example here. I think that there's a really interesting example in post-World War II in U.S. dollar markets, right? So everybody wanted to pay for things in dollars. Dollars became the reserve currency of the world. The problem was a lot of countries couldn't get their bank accounts opened in the U.S., which is, an issue that we still see in the 21st century. But what then that ended up prompting was the building out of the euro dollar markets in London, where by the end of the 70s, you actually had way more dollars transacted in London in the euro dollar markets than you did in the US in the US dollar markets. And so that's exactly, I think, a very similar type issue to what we're seeing in Bittensor, where there is a barrier of entry to get into the Bittensor ecosystem natively. And I think that will eventually erode over time, but there is a lot more demand, there's a lot more volume, and there's a lot more excitement over on other ecosystems, namely Base, where that volume could easily outstrip if we get enough of a mind share.
Speaking of derivative markets, the options market is vastly bigger than the underlying. Do you guys have any plans of creating these derivatives on top of this liquid alpha token you guys are creating?
What you don't see under the desk is the big ball that Mike holds onto me to stop me from going off to build derivatives. Because if you let me go build derivatives, we will. But yes, short answer, yes. Longer answer in terms of when, where, how. There's nothing concrete on that just yet.
Look, we're building a primitive that will allow anybody to go build derivatives, right? Does the entire stack have to be built by us? No. And I think why we are building something from the foundational level is because we want to open up that door for innovation to anybody in the ecosystem. Victor's our local historian, but I'll give a historical example for myself. When the kind of founding fathers of the internet were thinking about protocol design, they intentionally left white space for companies to build on top of. So they intentionally didn't add backlinks, which allowed Google to build $1 trillion business on top of Google. They could have added that feature, inherently from the very beginning. They chose to leave white space to allow other companies to go innovate on top. I think what we're trying to do is we're trying to build a foundational primitive here that will allow other companies to go build profitable businesses without us having to entirely own the entire stack.
All right. Well, Victor and Mike, I got one last question today, and that is, you guys do a lot of things throughout Bittensor on a lot of different levels, from subnet owning to validation to now building a bridge. How do you guys, or what advice do you have for people, teams, in where they should allocate their time? What is actually worth building?
I think the direction of travel for the Bittensor ecosystem is, user adoption is going to be key, right? We've seen the kind of meta narrative shift multiple times, right? Prior to DTAO, being a subnet owner was the best game in town because you're just earning straight TAO to your owner wallet. Following the launch of DTAO, validating was kind of the outright winner. It was the biggest kind of cash cow, at least in our kind of portfolio stack. Mining has shown, it's gone up and down over time in terms of its value given the emissions burned. So, building in the Bittensor ecosystem, you have to be agile. You have to know kind of where the puck is heading. I think where the puck is heading now is distribution and real users that can drive value to your underlying products, right? So the application level is one thing that is underdeveloped relative to the actual underlying R&D and infrastructure that's been built on Bittensor, right? We have some of the best digital commodities in the world being produced on Bittensor, but the front end applications that can bring in those tens of thousands, hundreds of thousands, millions of users have not been developed yet. There's massive opportunity to build front end applications that make Bittensor simpler. And I think that's one of the things that we're trying to focus on now is how do we drive mass adoption to the actual underlying commodities that are being built here?
Yeah, and
Victor, would you add anything?
Yeah, to add one thing to that is I think the incentives now post the Tau Flow update are pretty clear, right? Is find a way to generate more buy pressure than you're emitting in sell pressure, right? And if you're able to do that, you get a higher share of emissions. And I think that's a fairly clear model for everybody to build to it. So if you are looking, especially building a subnet idea itself, take the time to really figure out who are my users? How do I build the alphanomics in a way where I am actually minimizing that sell pressure? And how am I maximizing the buy pressure? And how am I tying the digital commodity that I'm building around this flow of Tau and alpha in the pool? And I think that's a very, very crucial thing that teams need to take a bit more time to really fully understand if they're looking to build in Bittensor.
Victor, Mike, it's been a pleasure having you guys on today. Thank you.
Pleasure's all ours, man. Thank you. Appreciate you, Grant.
Thanks for having us.